2026 is almost here, and the truth is, keeping your money just sitting in the bank won't cut it anymore. Inflation keeps rising, costs go up, and if your money isn't growing, it's quietly shrinking. That's why learning where to invest is more important than ever. The wealthy know that every dollar has a job. It should be working for you, building more freedom, and creating security for your future. So today, let's talk about where you should invest your money in 2026. No hype, no get-rich schemes, just smart strategies that actually work. 1. Why saving money alone won't make you rich. Saving is safe, but it's not enough. Think about it. If inflation is 5% and your savings account gives you 1%, you're losing 4% of your money's value every year. That's why the wealthy save for short-term needs, but invest for long-term growth. Your savings account should only hold what you need for your emergency fund or short-term goals. The rest? It should be working for you in investments that grow faster than inflation. Money sitting still is money slowly disappearing. 2. How the wealthy use debt to multiply assets. Most people see debt as a bad thing, but the wealthy see it as a tool. The difference? They use good debt, the kind that makes money. For example, they'll take a loan to buy a property that pays rent or an asset that appreciates in value. The rent or growth covers the debt, and they keep the profit. Meanwhile, bad debt, like credit cards or car loans, takes money away from you. The key is to borrow for assets that generate income, not liabilities that lose value. Used wisely, debt can accelerate your path to wealth instead of holding you back. Quick question before we move on. Which one do you think is worse in 2026? Bad debt or inflation? Drop your answer in the comments below. I want to hear your take, and I might even feature some of your answers in the next video. 3. The 50-25-25 rule that keeps billionaires rich. Here's a rule of thumb that a lot of wealthy people secretly follow. The 50-25-25 rule. They divide their investments like this. 50% in long-term stable assets like real estate or index funds. 25% in medium-risk growth assets like stocks, ETFs, or businesses. 25% in cash or liquid assets ready to invest when opportunities come up. This balance helps them stay protected and flexible. They never have all their money in one place, and that is how they stay rich no matter what happens in the market. Try thinking about your money the same way: safety, growth, and opportunity. 4. Investing in a course that adds you skills or knowledge. One of the best investments you can make isn't in the stock market, it's in yourself. The skills you build today can make you money for the rest of your life. Whether it's learning digital marketing, real estate, investing, or even public speaking, knowledge compounds just like money. If a $100 course helps you make an extra $500 or land a better paying job, that's an insane return. Never stop learning, because in 2026 and beyond, your value in the market depends on what you know and how fast you can adapt. 5. Creating an emergency fund. Before you invest a single dollar, you need protection. That's your emergency fund. Aim to have at least 3 to 6 months of living expenses saved in a safe, accessible place, like a high-yield savings account. It's not meant to make you rich. It's meant to keep you from going broke when life happens. Because the worst investment decision you can make is selling your assets in a panic just to pay bills. An emergency fund is your financial seatbelt. You hope you don't need it, but you'll be thankful you have it. 6. Investing in real estate. Real estate continues to be one of the most reliable wealth builders, and 2026 will be no different. Whether it's rental property, commercial spaces, or even REITs, real estate investment trusts, property gives you 2 key things: cash flow and appreciation. Even small investors can start through fractional platforms or REITs and slowly build their portfolio. It's not just about owning buildings. It's about owning income-producing assets that grow in value while paying you every month. 7. Leverage joint ventures. Sometimes the smartest way to invest is not alone. A joint venture means partnering with someone who has what you lack. Maybe they have capital, and you have skills or time. Together, you can invest in opportunities that neither could on their own. The wealthy do this all the time. They build networks, combine strengths, and share profits. The key is to choose partners wisely, with written agreements and mutual trust. Money grows faster when it's combined with the right people and purpose. If you're enjoying this breakdown so far and want more investing tips like these every week, Hit that subscribe button and turn on notifications. That way you don't miss future videos that can help you grow your wealth in 2026. 8. Investing in ETFs. ETFs, or exchange-traded funds, are one of the easiest and safest ways to invest in a diversified portfolio. Instead of buying individual stocks, you buy a basket of them, spreading your risk automatically. ETFs are perfect for long-term investors who don't want to constantly monitor the market. Here are 10 solid ETFs to look into in 2026. Research them before investing. VOO Vanguard S&P 500 ETF, QQQ Invesco. NASDAQ 100 ETF, VTI, Vanguard Total Stock Market ETF. VXUS, Vanguard Total International Stock ETF. SCHD, Schwab US Dividend Equity ETF. VIG Vanguard Dividend Appreciation ETF. VNQ Vanguard Real Estate ETF. ARKK, ARK Innovation ETF, for higher risk, higher reward. XLE Energy Select Sector ETF. XLV Healthcare Select Sector ETF. These give you exposure to different markets, tech, real estate, global stocks, and more, without needing to be an expert stock picker. 9. Invest in your network. Here's something most people overlook. Your network is an investment. The people you surround yourself with can open doors that no stock or crypto ever could. Connections lead to opportunities, ideas, partnerships, and even investors. Attend workshops, online communities, or local meets where people share your goals. One good relationship can completely change your financial future. In 2026, invest in your network intentionally. It might become your most profitable asset. So, those are some of the smartest places to invest your money in 2026. From ETFs and real estate to personal growth and strong networks, remember, investing isn't about timing the market. It's about time in the market and the consistency to keep growing. The sooner you start, the more your money and your skills can compound. If you've got value from this video, hit the like button. It really supports the channel. And if you haven't yet, subscribe and join our community of people learning to build wealth the smart way. Drop a comment below. I'd love to read your thoughts. I want to hear from you. Which of these investments are you focusing on in 2026? Thanks for watching, and I'll see you in the next one.